contact us if you have a legal question, and if you're not, please contact your own independent legal advisor. So with that, I'm going to hand it over to Chris Daniels. Again, he's the Senior Claims Counsel at Great American Insurance Group, and we are so excited to have you here today, Chris. Thank you so much.
Barca, thank you very much for the introduction. As Barca indicated, my name is Chris Daniels. I am a Senior Claims Counsel for the Great American Insurance Company and the family of companies. Because of that, you all get to enjoy a second disclaimer. I know that's exciting. It's what we're all here for today. The following presentation is for information and discussion purposes only. Any views or opinions expressed are the speakers, shall not be construed as legal advice, and do not necessarily reflect any corporate position, opinion, or view of Great American Insurance Company or its affiliates, or a corporate endorsement, position, or preference with respect to any contractual terms and provisions or any related issues. If you should have any questions or issues of a specific nature, you should consult appropriate legal or regulatory counsel to review the specific circumstances involved. With that, we're going to jump right into the material. I will give just a very brief introduction of myself, a short biography, if you will. I've been in the insurance industry for a little over 18 years, the better part of the last decade as an attorney in a number of different roles. I've litigated cases in the courts in the state of Michigan and Ohio, and I have transitioned to the corporate role that I now have. Now, the job title Senior Claims Counsel is super fancy, and I love to put it on my business card. The reality of the situation is anyone who encountered me would say I'm a coverage attorney. A coverage attorney is an individual who basically spends the day reading insurance policies, reading law, and trying to figure out what all that jumbled mess means. To that end, let's go ahead and walk through what I think are the 5 steps important to having an informed conversation with your insurance provider. My goal today is that each of you leave here feeling a little bit more confident about your next conversation with your insurance broker or agent. You're going to be able to talk about, with a little bit of intelligence behind you, some of the things that are confronting your nonprofit organization. Step 1, we're going to identify some risks. What are those risks that your nonprofits are concerned with? I call this group of risks your top-line concerns because they encompass the 3 biggest risk sources you encounter as an entity. People outside your organization, people inside your organization, and your organization's possessions are roughly what I mean by those 3 top-line concerns. Ladies and gentlemen, insurance is the business of risk minimization, mitigation, and indemnity. No more and no less. Keeping these sources of risk in mind is going to help you understand how to minimize, mitigate, and indemnify the losses which may result from them. Here we have a group of what I call secondary but not second-rate concerns. When we drill down into nonprofit organizations with particular concern, certain themes are going to arise. Looking past those sources of risk from our first slide, we're going to see the different types of concerns any of those risk sources might cause. I would caution everyone, this list of risks is 100% not complete. There are plenty of risk sources your organization is going to face that are just not on this list. They're unique to you. What I've got here is a sampling of those which are very common within the industry and the world at large today. Roughly, think of the prior slide as where the problem comes from, and this slide as what the problems are. So now that we've worked through identifying what our sources of risk might be and where those risks might lead us, we try to understand some of the tools used in the insurance process to protect you. First and foremost, the big elephant in the room is always your commercial general liability policy. This covers most of those risks which you would see from outside your organization. I make reference here to ISO. ISO is the Insurance Service Office. It's a trade organization in the industry which writes and sells the forms that are generally used by insurance carriers. Carriers usually do one of three things. They sell an ISO form as it's written, they sell an ISO form with certain modifications within that form, or they sell an ISO form with endorsements modifying the form. As a practical matter, I'm personally not aware of a single U.S. carrier that sells a wholly non-ISO form, certainly in the commercial general liability space. The current CGL, or the CG0001, core ISO liability form was written in 2013, or it was promulgated in 2013 after it was written in 2011 and 2012. At 6 years old within the industry, we tend to think that it's due for another rewrite. Expect to see more issues with cyber risk and long-term abuse exposure addressed in the next rewrite. These are hot-button issues that aren't going anywhere. The form covers losses, as I said, to people outside your organization, or, as you and I would call them, the people who are suing you. One key point I would draw out for the nonprofit is that the base ISO CG0001 does not cover offenses of discrimination. Most umbrella policies do, however, cover offenses of discrimination. Why do I bring this out? Well, frankly, one discrimination lawsuit will tell you all you need to know about the value of commercial umbrella discrimination coverage. In fact, there's one particular type of discrimination lawsuit that's becoming more and more prevalent, especially here in the Midwest, and those are ADA compliance cases. The Americans with Disabilities Act requires any place of public accommodation accommodate those individuals with disabilities. One of the ends that are used to achieve that, one of the means that are used to achieve that end is what's known as an ADA tester. And this is someone who will come onto a piece of land and evaluate whether or not the facility is ADA compliant. That individual is a private citizen. The individual has no connection to the enforcement arm of the ADA or any other regulatory role. But they come on the land and they say, oh, this step isn't the right height. Oh, there's no wheelchair ramp. Things of this nature. And one of the allegations in those ADA complaints is invariably discrimination. I was discriminated against on the basis of my disability. If you have an umbrella coverage or some standalone discrimination coverage, you'll be protected in that area. If not, best of luck. The next core policy part I'd like to talk about is what's commonly known or colloquially known as the D&O, or the Director and Officer coverage. You can see the base form ISO typically used for not-for-profit management liabilities. So what does a D&O cover? D&O is going to cover one thing and one thing only: the wrongful acts of directors and officers within their capacity as directors and officers, as well as the liabilities faced by the organization for those acts. What a wrongful act is can vary widely from policy to policy, but broadly speaking, it's something you shouldn't be doing. It's a bad act. Something the director or officer should not have done because the act is morally, legally, or contractually objectionable. This is an affirmative act-based coverage. You have to do something, but intent is usually irrelevant. Let's look at what an insurance policy might call a wrongful act. The definition within this MP 0006 form for a wrongful act is that with respect to the insured persons, any actual or alleged error, misstatement, misleading statement, neglect, breach of duty, act or omission by the insured person or within the insured person's capacity for the organization. That's a pretty big mouthful there of what can be considered a wrongful act, and that's actually very powerful information, knowing that such broad coverage is available for your directors and officers. In fact, as we see taking a look within the wrongful act and how it works hand in glove with the word claim, and just a quick note, anything you see in parentheses in my slides, these are going to be words that are specifically defined within ISO standard language. As we just read through a definition of wrongful act, I assure you, there's also a definition of a claim within that policy. What do we have that's a claim? Well, if we look through this, you start really quickly to see, okay, written demand for money, that makes sense. Lawsuit or similar proceeding? Okay, sure, I get sued. That sounds like a claim. Criminal proceeding? Hold the phone. My directors and officers can be covered against criminal acts by an insurance policy? Of course they can. That's one of the core coverages of a director and officer's policy. Whether or not it's ever going to pay anything as a result of a criminal act is a little bit questionable. But, and that's mostly because criminal proceedings end up with people behind bars, not checks being written. However, the cost of defending that criminal proceeding can be very large for an organization, and that's the real value you're going to find in a director's and officer's policy if a criminal act in the scope of the organization has been alleged against one of your directors or officers. And of course, the final one there is going to be a formal administrative or regulatory proceeding against the insured, commenced by the filing of a notice of charges, formal investigative order, or similar document. A common regulatory proceeding you might see would be an EPA violation or an OSHA violation. Switching gears a little bit, we go ahead and move from the people who are going to sue you problems to the, oh darn, I just lost something I like problems. So take a look around your organization. Marie Kondo might encourage you to find the ones that spark joy. I'm going to encourage you to find the ones that are worth money. Do you have a rental space? Do you have an own piece of land? Do you have a building? No? Okay. But how about other tangible things? Do you have cookie sheets? Do you have blankets that you're holding on to distribute to the poor and unfortunate? Do you have a computer bank that you're using in after-school programs? Do you have foodstuffs that you are distributing within the community? Aha! If you have anything worth money, it is insurable under a property policy. Don't fall for a trap that just because it was donated, it's not worth money. It's still worth money. That's why those people get tax deductions when they give it to you. Also, it will cost you money to replace that item, even if it's just the cost of going out and soliciting another donation. So please consider insuring those things which belong to the organization or which used in the organization's activities. These items are commonly known as business personal property, and they are absolutely 100% insurable. So now that we've worked our way through the sources of risk, the types of risk you might find, and the insurance policy parts that might cover some of those top-line risks, let's talk about some more deep dive issues and troubles facing nonprofits today. One that I was very happy to engage the people at PBPO about and talk through because it's such an important issue is assault and battery, abuse or molestation coverage. It doesn't sound like a fun topic, and frankly it's not, but that's one of the reasons that it is so important to talk about. You don't have to look much past the top stories on the news aggregation service of your choice to find stories about assaults, abuse, molestation, or other criminal acts connected with public entities. Schools, churches, athletic organizations. All of these entities are uniquely exposed, and nearly all of them are nonprofit. The personal relationships which are helping nonprofits thrive can also provide an environment where bad people can commit reprehensible acts. I'm not qualified to tell you how to stop this truly reprehensible and awful stuff that we're seeing in the news. What I can do is tell you it is really worth the discussion with your insurance professional. Talk to your agent, talk to your broker. It's not comfortable, but addressing what coverage you can acquire in the event a child attending an event you host is taken advantage of, or a person in your office assaults someone she mistakes for a thief can make all the difference. Understanding whether your policy covers these risks is an important consideration if you have contact with the public. If people are meeting people under your auspices, the chance for one of these is out there. People are attuned to it. The lawsuits are happening. Those points which I make in this slide, and you've probably noticed by now that I'm not a big fan of just reading slides to you, those are key takeaways that I'd like you to have when it comes to that coverage discussion. Please understand, when it comes to abuse, assault, battery, criminal acts, they're not going to be full limits type coverage. Typically somewhere between $10,000 and $50,000 worth of coverage is about all you can acquire. That comment on eroding limits That's a reference to defense costs. Your defense costs are going to come out of that limit, as opposed to most commercial general liability losses where you get a defense in addition to that indemnity limit. These cases often settle for the value of the defense, and you end up in a situation where, yeah, you didn't have a lot of coverage, but the individual who is presenting the claim is willing to accept that coverage instead of proceeding against you, and will just take what's in the policy and be on their way. Please, please, please consider bad acts coverage such as this. A little bit of a different sort of issue, as opposed to a type of activity we're seeing, is a sort of individual, a class of individuals that can cause a conundrum when it comes to the insurance of nonprofits. That group of people is volunteers. Of course, the lifeblood of many nonprofit organizations is their volunteer corps, those selfless individuals who give so freely of their time, money, and passion to the project that they love. I'd like to draw out a couple of examples from the CG 0001 as to why volunteer worker is a interesting consideration for you, and frankly, why making sure your volunteers stay volunteers is a really good practice when it comes to your insurance profile. There are two specific places that volunteer comes into place. The first is under what's known as the medical payments exclusion for insurers. Medical payments coverage is simply a coverage for if someone has an injury or accident that arises either on your land or from your activities. That money is paid without regard for fault. It's sort of a courtesy coverage, if you will. Well, generally speaking, persons who are insured under the policy may not claim medical payments coverage, except one important group, volunteers. Your volunteers, if they slip and fall while volunteering at the cookie cook-off, are going to be covered for the injury they sustain. Every other insured, people who receive payment for their services, they're excluded and not able to collect on that. It could be a really nice thing to be able to tell your volunteers, man, we are really sorry the cookie cook-off ended in your broken wrist. Here's some money for your medical deductible. Contrast that with how volunteers get a favored status as insureds for their liability while performing acts for the organization. Section 2, who is an insured of the CG 0001, identifies that. What we have is a most favored group of people within the policy. They get to both be covered for injuries to themselves on the job site or on the work site for your activities, and any liability that they might incur on behalf of the organization, you can also be indemnified for. That's why, frankly, it's very important to keep your volunteers workers within the CG 0001 definition of a volunteer worker. That's a person who is not your employee, who donates his or her work and acts at the direction of and within the scope of duties determined by you, you being the organization. And here's the important part, not paid a fee, salary, or other compensation by you or anyone else for their work performed for you. That last part, fee, salary, or other compensation, is critically important when it comes to keeping people as volunteers. Generally speaking, a small gift or reimbursement of expenses, not going to be a problem there. But when you start to say, man, that went 5 hours longer than I thought it would, here's $50 for your trouble, you could be opening yourself up to a can of worms you don't want. Another frequent exposure that we see with nonprofits is an auto exposure. You might be sitting here thinking to yourself right now, well, my organization doesn't own any cars. I'm okay to go ahead and eat my Hot Pocket and tune Chris out for the rest of this conversation. You would be wrong. Even the incidental use of an auto by an employee on an errand or a director driving to a conference can expose your organization to liability. Even if the organization is ultimately not liable, the value of having a defense attorney stand there to protect you against that claim can be a little bit hard to quantify. Not only is there the cash value of the services that defense attorney is incurring, paid for by your insurance company, there's also the peace of mind that comes along with, thank goodness I don't have to worry about that. Just to give you an example, the cost of a successful defense of an auto liability case can easily exceed $25,000 to $50,000. You heard that right. Winning an automobile liability case, depending on where you are, typically costs between $25,000 and $50,000. It goes up from there if it's complicated, meaning multiple plaintiffs or difficult injuries. The cost of losing one of those cases, well, there's no real limit to that number. It could be whatever a jury is willing to give. So please think about hired and non-owned auto coverage. Hired and non-owned auto coverage can frequently be endorsed onto your commercial general liability policy. It's inexpensive, and it's a good way to address an exposure that only goes bad for you. Another issue that we see with nonprofits is events. Oftentimes, you're going to be having special events. These might be your large annual fundraisers or something of that nature. If you're hosting, or maybe even the title sponsor of an event, consider reaching out to your insurance agent or broker to address this exposure. Typically, you're going to find very affordable coverage for a very high or reasonably high limit. $500,000 and $1 million policies are very common, and you're typically looking in the under $500 range for that policy. This is something outside of your usual policy or insurance program. If you're hosting an event, really anything from Oktoberfest to a revival camp at a location other than your own, you should really consider an event policy. If you read the terms of renting a banquet hall or similar facility, you will find out really quickly that the organization, that's you, assumes the liability of the facility, that's them, for just about anything that happens. Someone gets drunk, slips and falls, cracks their head open, that's on you. Bad shrimp gives everybody, you know what? That's yours also. The reality of the situation is, I know about this with particularity because I've represented a number of halls. I've represented a number of banquet halls. And let me tell you something. The bride never likes getting the letter from me that says, while you were out, we got a claim in for your aunt. I hope you enjoyed your honeymoon. It's the last vacation you'll be taking for the next several years because you owe for her broken ankle. Moving on from the sort of risk side of things, let's talk about the happy part of insurance. When the money comes back to you, presenting a claim. The claim presentation slide I have up here is really geared more toward the first party side of things. I'm not really all that tuned in to how to successfully present a casualty claim. Why? I've always been on the other side of the transaction. I do know something about presenting property claims, and frankly, I don't think anyone's walking away from this today with the idea, you know what I really want to do is find some people to sue. So let's talk a little bit about how to present a well put together first party property loss. The tips you see here are baseline ideas for how you can make your process go as smooth as it possibly can. The reality of the situation is, why are you presenting a claim for property loss? Your stuff just burnt up. It's not fun. It's been a bad day. But if you stick to some core ideas of how to pull this all back together, your process isn't going to be fun, but it will be survivable. So just about every insurance company either employs directly or through independent use claims adjusters. And what do we know about claims adjusters? They love to pay claims. Paying claims is the best part of being a claims adjuster. Why? Because when you write the check, the file is closed. Your work is done. How do I know this? I was a claims adjuster for 7 years. Everyone thinks we're just spoiling for a fight, and we love denying claims. Nothing could be further from the truth. We don't like problems any more than insureds do. What we want to do is put a check in your hand, a smile on your face, and send you down the road talking about what great service you got. From a selfish standpoint, the best claims I ever handled were those that showed up on my desk 80 or 90% finished, i.e. all the things on this checklist were done. Break it all down, clear communication, honest proofs make claims easy. What are proofs? Anything that goes to supporting your claim, any receipts you might have, photos you might have, anything that makes it seem like, yeah, that's what it was. After you've presented your claim, there's going to be a payment. Understanding the payment in a property claim, really we're just trying to sort out the different bases on which a first-party property payment might be calculated. The payment term is typically in the policy. It's going to be somewhere in the language, typically toward the back. Though some policy terms can be affected by regulations depending on where you're operating. The key to all of them is whether or not some sort of depreciation is applied generally. What's depreciation? That's just the used upness of whatever the thing was. You have a refrigerator. It's 10 years old. Is that 10-year-old refrigerator the same as the day you bought it? If you have a son like mine who likes to freeze mud pies, no, it's not. It's dirty. It's gross. That fridge is not the same as it was, so it's been depreciated. Actual cash value is just what a thing is worth the day it is lost. Often we think